Welcome to the main stage of the SOSV Climate Tech Summit. If you're watching me now, you're in the right place to watch the first of 2 days of interviews with many of the founders and investors inventing and financing the decarbonization of our precious planet Earth. My name is Sean O'Sullivan, and I am the founding and managing general partner of SOSV, which is the host of this event. SOSV is a multi-stage global venture capital firm which invests from inception, meaning right at the very start, in deep tech companies whose technology will improve human and planetary health. SOSV is one of the world's leading climate tech investors with more than 150 climate tech firms in our portfolio. Our co-investors include virtually every climate tech investor, from DCVC and Coastal Ventures to Temasek, Lower Carbon Capital, and Bill Gates' Breakthrough Energy Ventures. Many of these firms are our partners in this production. More on that soon. I am speaking to you from SOSV's New York City facility, which overlooks Penn Station in Manhattan. Today and tomorrow, I will be introducing sessions with the help of my SOSV colleagues here, as well as at SOSV's other labs and deep tech workshops in Newark, New Jersey, and San Francisco. Along the way, we'll tell you a bit about the incredible lab and engineering spaces and the people who work here. You might ask, why does SOSV invest a huge amount of energy in producing this summit? Good question. We do it because founders and investors face a crushing intellectual challenge. Think of all the industries, the science, the engineering, and the capital encompassed by what we call climate tech. The daily struggle to keep up and learn more makes mainstream venture categories, like enterprise software, look like grade school. At our past 3 climate tech summits, thousands tuned in, and we got a lot of thank yous. So we're back because we all have a lot to learn. Before we get rolling, I would like to make a few observations about climate tech investing. In the conversations today and tomorrow on the main stage of the summit, you'll hear a lot of analysis about the downturn in venture capital investing. Some of these conversations will swirl around the pretty massive impacts of the surge in interest rates, the excitements, perhaps overblown, of generative AI, and the comedown from the COVID peak of unsustainable valuations. What you'll also take away is that investors and founders have learned a lot in the past 5 years. There's been extremely fast-moving investments made across a huge variety of industries, from food and ag to energy and transportation, all in the name of decarbonization. There has never really been anything like this in venture capital before. Yes, venture capitalists do have a tendency to go a little gaga when new investment manias surface. Look at social media networks or crypto, or not long ago, or generative AI today. But those obsessions usually represent a specific technology looking for a big problem to solve in the real world. The climate tech category, on the other hand, encompasses the entire physical world. That's dozens of technologies across every industrial sector. That's a lot harder, a lot broader. There's so much to learn. And in the past 5 years, it's fair to say that investors, SOSV not the least, have learned a lot of lessons. The first is that magical thinking is a bad idea. There are no special market exemptions for climate tech in the real world. The hope that consumers or enterprise would pay a green premium has so far turned out to be wrong. It's no basis for building a solid, repeatable business. What works in climate tech is a better product at a market price that also happens to be a winner for decarbonization. That sets the bar very high, but anything else is a waste of time. The second is that government tax credits and grants can be a dangerous distraction. I don't mean to knock the IRA's $200 billion invested so far, or the many other often important sources of non-dilutive and R&D capital. But investors and founders must be extremely careful to distinguish strategic launch support from continuous life support. The first builds bridges to market success, and the second produces zombies. Conscientious investors can't have zombies propping up their portfolio. Another lesson is that venture is not some sort of leviathan, able to spin up vertically integrated industries that go on to decarbonize and dominate some critical sector. Yes, they're are examples to the contrary, notably, for example, Tesla. But betting on megacorns that take decades to emerge is not a strategy which is compatible with venture investing. If climate investing were like enterprise software, this would be easy, but it's not. What does that tell us? Two things. First, to make a return and have impact, VCs and founders must focus on industrial sweet spots, the parts of the supply chain that new technology can disrupt and decarbonize in a reasonable period of time. That might be robotic 3D weavers for zero waste local apparel manufacturer, a company called Unspun, or optics-based stimulation for cell cultured products in pharma or food production, a company called Prolific, just to reference sweet spots for two SOSV Climate Tech portfolio companies. There are probably thousands of sweet spots across all industries. VCs know only a fraction of them, but our job is to find the founders who know just one really well, and to do that many, many times. Second, we need to go corporate. Those founders who know the sweet spots will learn much faster if they are learning directly from the corporates who will eventually be their customers. At SOSV, we are seeing many more corporates join funding rounds far earlier than ever before. That's a great sign, but we need to get smarter earlier about how to make the most of this trend. Corporates are scanning for those sweet spots as well. Finally, we should be on a war footing when it comes to climate tech investing. This is about the survival of humankind. VC on its own won't be enough. It'll also require government involvement, public policy changes, and corporate commitment to change their means of production. But if we're smart, we can play a big role. Smart means being relentlessly honest and constantly iterating and adapting to surface the best breakthroughs and support the founders who will bring them to market. This is the world's largest gathering of climate tech founders and funders, with over 5,000 attendees expected over these next 2 days. We have a lot to learn together.